There's a secret that the richest people in crypto don't want you to know. A formula that quietly turned ordinary investors into multimillionaires while most people were distracted by hype, noise, and short-term trends. Now, I'm not talking about insider trading or having early access to private sales. I'm talking about a mindset, a structure, a formula that's been used for decades, not just in crypto, but in every market where wealth is created and multiplied. And today, you're going to hear it. Because once you understand how the rich truly think about crypto, you'll never look at your portfolio the same way again. Most people lose money in crypto not because they pick bad coins, but because they follow the wrong system. They buy high, panic sell low, and never understand the game the rich are actually playing. Rich investors don't chase pumps, they create positions. They don't ask, what's trending this week? They ask, what's undervalued for the next cycle? The difference is simple. One group follows emotion, the other follows a formula. So, what's this formula? It's built on three simple but powerful pillars: capital allocation, time, and conviction. The rich treat every dollar like a soldier. Each one has a mission to bring back more dollars. But they never send all their soldiers to the same battlefield. When wealthy investors enter the crypto market, they don't go all in on one project. They structure their portfolios with precision, using what's known as the core satellite strategy. The core, around 70% of their portfolio, goes into long-term proven assets: Bitcoin, Ethereum, or strong Layer 1 networks. These are the foundations: slow, steady, reliable. Then comes the satellite portion, the other 30%, dedicated to high upside plays. New protocols, tokenization projects, AI-based crypto ventures, or DeFi innovations. The core keeps them wealthy. The satellite makes them rich. Now, here's the second pillar: time, the wealth multiplier. Time in the market always beats timing the market. Every crypto billionaire knows this. The rich don't care about short-term dips. They love them. Because dips are discounts, a chance to accumulate more while others panic. If you had bought just $1,000 worth of Bitcoin every month for the last 5 years, you'd be sitting on hundreds of thousands of dollars today. That's the power of time and discipline combined. The wealthy use time like a lever. They think in cycles, not weeks. They study Bitcoin halvings, Ethereum burns, Solana adoption curves, and they know wealth isn't made in a year. It's made through patience across cycles. Then comes conviction, the final key. Conviction isn't blind faith, it's understanding what you own and why. The rich know the teams, the tokenomics, the roadmaps. They read white papers when everyone else reads tweets. Conviction is what lets them buy fear and sell greed. When the market crashes, they buy more. When everyone screams, "We're going to the moon," they quietly take profits. The average investor reacts. The wealthy anticipate. In 2018, while everyone said crypto was dead, a few wealthy investors were quietly accumulating Ethereum at under $100. They saw the potential of smart contracts. They saw the next wave coming. By 2021, that same Ethereum was worth over $4,000. That's a 40x return. Not luck, but a formula in action. Now here's the part most people miss. The rich don't just earn from price growth. They earn from yield and leverage. While average investors wait for bull runs, the rich compound their crypto. They stake, they provide liquidity, they earn yield. Staking Ethereum on Lido or locking stablecoins in Aave or Compound can earn anywhere from 4 to 10% a year. That may sound small, but compounding turns that into massive growth over time. That's how you build income streams that thrive even in bear markets. And that's the difference between speculators and wealth builders. The secret isn't about guessing the next meme coin, it's about designing your portfolio like the rich do. They use what's called the three-tier wealth stack. Tier 1, blue chips like Bitcoin, Ethereum, Solana, Chainlink. Tier 2, mid-risk assets like DeFi, Layer 2s, tokenized projects. Tier 3, high-risk, high-reward altcoins, early-stage gaming, or AI tokens. Most people flip this upside down. They put everything into high-risk coins and wonder why they lose. The rich keep their foundation strong, and that's what allows them to take smart risks. Another principle they follow is diversified accumulation. They don't wait for the perfect entry. They buy consistently using dollar-cost averaging, small amounts, every week or every month. It's boring, but it works. Because over time, your average price balances out, and volatility starts working for you instead of against you. Glassnode data shows that long-term Bitcoin holders who use dollar-cost averaging outperform short-term traders in nearly every market cycle. That's math, not luck. But let's talk about mindset, because the real difference isn't just in portfolios, it's in psychology. The rich don't see crypto as a get-rich-quick opportunity. They see it as an ownership revolution, a shift of power from centralized systems to decentralized ones. That's why they stay calm in chaos. When the market crashes, they're buying the future, while everyone else sells their fear. Real profits are made in silence, not hype. By the time the crowd wakes up, the opportunity is already gone. So if you want to build wealth like the rich in crypto, remember this formula. Allocate smart, stay patient, build conviction, and above all, stay disciplined. Disciplined to stick to your plan, to accumulate when others doubt, and to believe in your long-term vision. Crypto rewards those who treat it like a marathon, not a sprint. The rich don't chase hype, they create frameworks. They don't trade emotion, they trade logic and patience. Their formula is timeless: capital allocation, time, conviction, and discipline. Simple, but powerful. And if you apply it step by step, you'll start to see patterns of success forming. Because wealth in crypto isn't luck, it's engineered through habits, consistency, and clarity. So the next time someone shouts about the next big coin, remember, the real secret of the rich isn't the coin they buy. It's the system they follow. If this opened your eyes, don't just leave with motivation, leave with action. Start building your own formula. One decision, one investment, one mindset shift at a time. Because the next crypto millionaire might not be the loudest person in the room. It might be you, quietly following the formula.